For the past several years, the rise of Tesla stock has captivated and thrilled Wall Street. But the thrill vanished, and shares have dropped over the past year. Because investors were worried that CEO Elon Musk was too distracted with his takeover of Twitter. Why have Tesla shares dropped so much over the past year? And is it beneficial to buy now? Should you buy one or invest in Tesla stock? To know the answers to these questions, let's get started. But before that, if you're interested in improving your financial future, subscribe to the channel and hit the like button if this video is helpful. Just a reminder that this video is not about financial advice. So before making any kind of investment in Tesla, do your own research. Tesla's stock lost 65% of its value in 2022, and the company kicked off 2023 by dropping 12% in a single day. That's not only bad for investors, but also bad for CEO Elon Musk, who has a big chunk of his wealth tied to it, and is no longer the world's richest man. But what made the sales figures so disappointing when Tesla had set new sales records and grew deliveries by 40%? It dominates the electric vehicle market in the US, which is rapidly increasing as the world strives to reduce carbon emissions. It was a challenging year for the entire auto industry, and the stock market as a whole declined in 2022. Big names like General Motors and Ford fell some 40%, and startups like Rivian and Lucid dropped more than 80%. 2022 started off with shortages of parts that kept dealer lots unusually empty and ended the year with sky-high vehicle prices. And the result? U.S. auto sales declined in 2022 to decade lows. Tesla's sales may have increased by 40% over 2021, but they fell short of its ambitious growth targets. Despite a tough year for the auto industry, electric vehicle sales increased last year. And the bad news for Tesla? Competition is rising. At the high end of the market, names such as Mercedes-Benz, BMW, Audi, Lucid, Rivian, and Polestar are starting to cut into the territory of Tesla's pricier models. Meanwhile, vehicles like the Kia EV6, the Ford Mach-E, and the redesigned Chevy Bolt are starting to chip away at the mass market for electric vehicles. There is also growing competition in China, which is a critical market for Tesla and other automakers. Tesla still makes up 65% of U.S. electric vehicle sales, but the percentage is dropping. Musk has run multiple companies for years, and his aura, according to his fans, is of a genius and a visionary, and that is part of the reason many people want a Tesla. Now Musk has become a professional Twitter troll, posting provocations and embracing some right-wing positions. Tesla's net favorability fell by 20 percentage points among Democrats and rose by 4 points among Republicans between October and November 2022. That could be affecting sales, but Musk has also had to sell billions of dollars of Tesla shares to fund his Twitter takeover, which hurt the stock. He saw his own personal wealth drop sharply, but he still has more than $100 billion. Also, the amount of time he's spending on Twitter is cutting into the time Musk has for Tesla. Many Tesla investors are asking for Musk to name a new CEO of Twitter. He has claimed he will name someone and then step back from Twitter. Another possible reason why Tesla stock fell so much can be that it was priced too high to begin with and is now trading at more realistic levels. Because before this, Tesla traded like a high-flying tech stock rather than a manufacturer of goods. Musk himself called Tesla a software company, and the stock price soared so high that it could not be justified based on Tesla's revenues or production figures. But now prices have tumbled back closer to earth. Tesla produced 8.5% more vehicles than it delivered for the last quarter of 2022. It is yet to be determined if the gap between production and deliveries was due to decreasing demand or logistics issues. With the stock hitting a 2-year intraday low, is now the time to go all in? Or could there be more pain ahead for the electric vehicle industry leader? As tempting as it may be to buy Tesla now, I think you should first take a step back and decide what you believe Tesla's value proposition really is. There are many faces to Tesla's business. The core is the production and sale of electric cars to consumers, which has a lot of room for growth, but the bigger growth story is the company's penetration into the trucking industry and its proprietary autonomous driving technology. There are many companies that are working on lowering emissions for Class 8 trucks, but no company has achieved the milestones that Tesla has with its electric semi-truck. In November 2022, Tesla's semi-truck achieved 500 miles of range with a full load. Tesla's progress indicates that the electric semi-truck industry could one day end up being more profitable for Tesla than its consumer cars. But that's a big if. In addition to the semi-truck and autonomous driving markets, there's also an opportunity for Tesla to expand its renewable energy generation and storage efforts. Investors interested in the electric vehicle industry are getting a rare opportunity to buy Tesla stock at its lowest forward price-to-earnings ratio ever. The company can take market share in a slowdown because it has the balance sheet and operating margin to handle it better than its competitors. That advantage justifies getting started in Tesla stock. Investors have had high expectations for Tesla over the past 3 years, so for those who believe the company and the electric vehicle sector will continue to grow, the 65% drop in the stock price in 2022 provides an opportunity to invest in Tesla. Also, looking at the bigger picture, the company's growth remains strong as its production increased by 47% in 2022 versus 2021, but deliveries only increased by 40%, leading investors to believe Tesla might not meet its previous projections to average 50% growth over the next few years. But even if Tesla grows earnings by only 30%, it recently was priced at a price-earnings-to-growth ratio of below 1.0 based on 2023 estimates. Accumulating shares makes sense now if you are a long-term investor. Tesla stock could easily set new all-time highs in the future, but the problem with stock prices rising so quickly is that the company has to hit lofty goals to make the valuation reasonable. However, as impressive as Tesla's growth has been, a mix of macroeconomic and self-inflicted challenges are making those lofty goals increasingly unlikely. Missing delivery expectation paired with the possibility of a recession adds another layer of issues impacting Tesla. But even after all of that, now is the perfect opportunity to reassess what your investment thesis for Tesla is. And also, if you want to open a starter position in Tesla or add to Tesla stock, that it's at a reasonable valuation now. So as a stock, Tesla had a terrible year. But as a company that makes cars, Tesla managed to sell 1.3 million of them in 2022. Given the supply chain struggles that have plagued the entire industry, it's impressive. Looking ahead, even with more competition, there's plenty of room for Tesla to keep growing, as experts are saying that Tesla's volumes are still going to come up and going to make money. And even after losing a mind-bending $700 billion in value, Tesla is still the world's highest valued automaker. So if you think Tesla is just a consumer electronic vehicle play, then it cannot be a compelling buy. But if you think Tesla will become a major player in the commercial trucking industry and be a leader in autonomous technology, then it's a great time to buy both, either a Tesla or a stock of the electric vehicle industry leader. So that's all for today, guys. Make sure you give this video a thumbs up and subscribe to my channel so you don't miss out on the fantastic financial content. Until next time.